Welcome to TradeTheNBI.com. This is John's report is for the 28th, and well, we're pretty much right in line with our retrace expectation. Obviously, NBI white leads. We finally got a little turn up of magenta. It's probably going to help support things, not much from a push standpoint, but you can see from even our DOC, we were looking at some pretty extreme numbers, and usually at that particular range, we're at minus 22 on the red and 25 for green. Usually expect some kind of up push in there. We would think that max on that would be towards the 23%, but still extreme histogram below the red line, shakeout just looking uglier too, and it's also getting into that range where you get some kind of a respite. And even like the other day when we made the new lows and then all of a sudden there was a giant spike back, and what you get is those volatility gam situations where you get to an extreme point and dealers turn around and start buying everything to create a short cover, and it's pretty effective in the short term, but usually they fade back. And we were talking about on the Skype chat where we had bounced up and we expected a portion of the positive extremes that were being created to fill back within the same period, and they did, and came back all the way to that 50% level. We'll look at it on the 5K chart in a minute, but from an NQ standpoint, still stronger overall than the ES, at least from a price action standpoint, but readings almost identical. And as long as that orange DOC continues to fall, we're still within the same range, so continuation, but any pop-up would be very negative at this particular stage. So even if we do get a turnaround here, it's likely to be short-lived, and we come back and retest for another move higher. That's where we look for the divergence on the DOC, where we get a higher histogram or same improvement from a red DOC situation. From a treasury standpoint, again, yields definitely a drain on the market, because when you can get that kind of return from treasuries, makes speculation in the market a little bit more difficult, not to mention the borrowing costs to be in the market. But the big problem here is this, that spike in oil the other day. This just further adds to the difficulties, and also it's an impression to the Fed that they're going to have to continue tightening, or at worst, they would just hold, which would definitely move things more underwater from an inflation standpoint. And this is something that we talked about, the comments from the Fed. They may let inflation continue to rise, continue to say they're going to, attack it, but purposely be late on the curve, because again, it dries up excess liquidity and certainly puts a damper on market moves. Euro making new lows down into that 1.4 range. Again, this gets difficult to justify, again, being in the euro. But everyone talks about the dollar being so overdone in that. But clearly, when you can go into the U.S. market and get a much better yield than you can get from your euro, why would you be in a euro? So, and that oil continues to also be a problem. So those two factors really putting major pressure on Eurozone and other currencies, because again, also people forget, but in third world countries where their debt is based in US dollars from loans, and that a lot more expensive to service those debts as well, and that becomes problematic from a global economic viewpoint. It takes months for it to have an effect, but it does have that effect. And the continued decline in gold, very unusual given what we're seeing from an inflation situation. But again, we talked about this. Likelihood is that you can really affect these from the paper market. And when it does begin its spike up, as soon as things clearly look to be either weakened economy and or extreme inflation, gold is going to have its moment. You get the same situation with Bitcoin and them. They're going to struggle during this period as well. Simply because there's just a lack of easy money situation and no real threat now at this particular stage. As much as people want to talk about the collapse of the dollar and all that stuff, it's just a bunch of nonsense until the West stops trading commodities in the dollar. It's still going to be something necessary to buy in order to get the commodities they need, and with oil being one of the primary commodities you need, you got to have dollars. So they're going to have to get them no matter what they are, and that just puts more pressure on their currencies. From a 50K standpoint, you can see how we dipped down middle part of the day, and then there was this dramatic shoot up. Again, we got a pop of the NBI white. Just now we're starting to see the decay of the magenta, but still looking fairly decent. But a dip below that 25 certainly would accelerate a move back down towards that 0%. But you can see here the improvement from how that DOC, we started there, made new low on a higher extreme checkout histogram, and that led to a nice pop. So that was a divergence that became pretty clear. And what it looked like from an intraday standpoint, we started off with our pre-market was holding up well, and then just before the cash open, we get the sell signal, and then that just pretty much stayed throughout until you got this massive short cover push that elevated things. And this is what we were talking about with the positive extremes that had developed literally from the breakout of the move. But we came back all the way from there to the 50%, and then it just caught strength going all the way through. And then we look at it from a pre-market standpoint, came back, tried to test that previous low, was a little bit stronger than that, and that's enough to create some buy enthusiasm. But later broke down, and we filled even further all the way to that 50%. And so now we just saw a little squeeze going higher, all in positive extremes, coming back to the 43.10 range. Not that far away when you're looking at a short-term chart, but that's simply how we look for it, and can pretty much see where things are going to go with it. But I would expect more of these dramatic short cover rallies in between, and the idea is that they're going to try and push to elevate things further and see if they can get even greater short covering, but it's difficult under the circumstances. Maybe if you get a down press in oil in that would take some pressure off and allow that rally to continue, but otherwise continues to remain under stress at this particular stage. As always, I'll update you on the Skype chat. Have a good one. Trade well.